Right, so we're up 21% off the lows, and days like today kind of shows it. Our upside is getting more limited. Our downside is becoming a lot more risky per se, and so that risk is starting to just quietly build with what we saw beneath the surface within today's kind of small, really small move and small range. I'll show you what I'm seeing and the trade setup, of course, and the full breakdown is available in our full market outlook video, which you can watch as a foundation member or any subscriber to Market Scholars with the link down in the description below or in the pinned comment. And the S&P 500 spent most of the day here drifting sideways in a really small 25-point range. That's one of the smaller ranges that we've seen for a while, and it's well below the ATR, which is itself already at a pretty darn low level. As you can see, the ATR is actually down below 1% now, and if it dips below this 0.8%, will be extremely low volatility levels. Volume continues to decline, reinforcing this tight, controlled price action that we've had. But not everything is as calm. Our market forecast indicator shows, the near-term line dropping below 40. The momentum line being here in bearish territory. So a little bit of a bearish short-term pullback within what is a pretty strong intermediate trend. This is exactly the type of behavior we want to see during a bullish trend. Little minor resets that shake out the weak hands without necessarily breaking any support level. So far, we haven't really even touched the 17-day moving average at all. Haven't even broken the 8-day. Got this classic low volatility stall at the highs, tight, a very tight range, fading momentum, but no real breakdown yet. So the next few days could be pivotal as to whether or not we turn into more of a short-term breakdown, or whether we most likely will bounce this right back up to new highs. As always, if you find these quick updates helpful, you go ahead and like the video, subscribe to the channel, hit that bell so you know when the next video is posted. Share it with anybody else who might benefit from these videos. That helps us get the word out to everybody and really supports the channel. We appreciate those who do that day in and day out. Now let's take a closer look at what this kind of stall usually leads to and why I think we're approaching a critical inflection point in this trend. We've now seen this momentum line dip into bearish territory for 2 straight days, and the near-term line fall under 50. These are early warnings that buying enthusiasm is slightly fading here, even though, again, the intermediate trend and long-term market sentiment are quite strong. And again, this pullback hasn't even broken the 8-day moving average, much less touching or breaking below the 17-day. That's how mild this has been, and volume you see is continuing to taper down. So this feels like more of a 2-day kind of exhaustion move, more so than a fearful move. At the same time, this intermediate return is up 21% off the last low point we had. That's pretty significant. The upside from here to get that number any higher may be a little bit limited, but the downside, even if it's just another 5% red tag, we're looking at about 5 to 10%. Obviously 10% on the worst case and 5% on the normal case. That creates a little bit of an unfavorable reward to risk ratio from this point. So that's why I've been talking more about these, the next red tag, because of how far we've gone up in the green tag, and these deeper pullbacks, and what we're just seeing, we've had plenty of near-term declines here, but once we actually do get a 5% or more decline, but most likely just a 5% decline, that helps reset sentiment. It helps create better opportunities. So we're not there yet, but it isn't, we are looking for trades here that reflect the fact that we don't have as much upside from a directional standpoint. And that's kind of what we're looking at for today's trade idea in the full market outlook video. It gives us a little bit of flexibility if we stall or if volatility reawakens. So whether this is a stall or something bigger is brewing, there are some smart ways to position so that we don't feel like we're chasing such a large move or we're trying to guess tops. And I cover all of that in a lot deeper breakdown in the, like I said, in the full market outlook video, including these technical setup breakdowns with different indicators we look at, the sector rotation, intermarket analysis in a lot deeper detail with the different macro drivers driving the markets today, and of course also our trade idea that we do every single day and during the market outlook live, as well as when we manage those trades during the market outlook live. All of that is available for all of our subscribers, including our base tier or our market outlook foundation tier, available for $29. You can join today. That's only less than $1.40 per market outlook video, and you'll get immediate access to all of those daily trade ideas that we post, as well as all the daily market outlook videos, half-hour market outlook videos. So thank you very much for watching. Make sure you subscribe to the YouTube channel, like and comment, follow and like us on Twitter and Facebook as well. Have a great rest of your evening, everybody, and we'll see you all tomorrow.